Today, I'm here with Sebastian Amieva. He's the world's most sought after expert on mergers and acquisitions. He works exclusively with six figure and seven figure entrepreneurs and investors to drive growth through mergers and acquisition. Sebastian has spent the last 12 years personally implementing mergers and acquisition strategies, investing into startups, and traveling around the world. Welcome, Sebastian. Thank you for being on the show today. What got you into I guess the catchphrase these days is acquisition entrepreneurialism, right? You're buying and selling businesses for a living. What got you started, or how did you get going?
Yeah, so I started a lot of business, from e-commerce to factories, different kind of business online, and I discovered it's way easier to buy a business instead of starting one from day one, right? So was the biggest reason, right? I discovered it's very easy to use the company target asset as a collateral to bring funds, to put the down payment, and to get that deal. So you get clients from day one, you get revenues from day one. This was the biggest reason I started into the M&A space. Right? To date, we closed 45 deals with my global clients. Right, I do some consulting, M&A training, some masterclass. But yeah, we are going to speak about today how to get started into the M&A, how to prepare yourself to become a qualified buyer, and all these things. Right, but yeah, I started because that way. But I discovered, as you can catch my accent, I'm not English native. I born in Argentina, Patagonia, and then I moved to the UK. I set up my family office there, and from there I bought deals in different locations, not just in the UK. I bought the biggest paddle court in Madrid. I bought even a football club called Rayo Cantabria in the north of Spain. And then I bought the biggest LED factory in Brazil with 700 employees, 22 million euros in assets. And from the UK, I realized I realized that from first world country, it's easier to get funds, to get capitals, and to do this LBO, so management buyout acquisitions. From Latin America, it's very hard to do this. But of course, I realized that if you have the holding company in UK or in the US from first world economy, then you can bring funds and put down the funds in the subsidiary in Latin American market, for example, or Southeast Asia or African countries. I think it's a good topic today for speaking about this today, about how to become a global deal maker, right? Because I've been approached by several entrepreneurs, and they say, well, I'm not based in the US, I'm not based in UK, I'm not based in Australia. How you can do it from Africa, Southeast Asia, Latin American markets, right? So I think could be nice to speak about this today. Yeah.
Might be difficult to buy a large company there, but because you have a holding company in another country, you raise money there and then take it and do the deal wherever the deal is. That's brilliant. So we can talk
Correct,
about
correct.
that.
Correct. This is how it works. If you want to be a global deal maker, always it's good to setting up your holding company in a first world economy, like setting up the holding in Delaware, or Wyoming, or Nevada for tax purpose in the US, or setting up in London, UK, or Sydney, Australia, or Canada, Toronto, for example. Right. Always setting up the legal entity, the SPV, or the holding company in a first world economy. It helps to bring credibility also to the investors. So it make them feel comfortable to invest into your first world entity. And from there, you can bring down the funds to Latin America for acquisitions and also for Southeast Asia or African markets. Right? I think it's a very good strategy, helping helping also Latin American companies exit, right? Because it's difficult. For example, a company from Brazil with $22 million asking price, it's difficult to find a potential buyer, right? So a good way for exit to them would be becoming a subsidiary company with a holding company in the US, right? So we using a lot this kind of strategies, holding subsidiary, which it really helped to acquire deals using leverage, right? Using the leverage of the subsidiary company.
I don't know if are other countries like that. When you get into the country, do you need to learn what's normal?
Yeah,
Um,
I try to say, listen, we are gonna do the American way or the British way. We are not gonna do any bribery. We are here to do ethical business. We are gonna setting up the holding in a first world economy. If in terms of the cultures, the difference, right? Always for the negotiation, you need to understand the culture, right? How they think, the way they behave, how they negotiate. It's not the same negotiating with American person, with the Latin American people. They have different ways of communicate, right? So For me, I will bring somebody from Brazil or somebody who speaks Portuguese at least because it's another language, and I will add them into my board just for credibility purpose and to help me to understand more their culture, to negotiate better with them, and to fully understand what they're trying to say and why they want to sell, for example. Right? What it means being a qualified buyer. You need to know what you're looking for. Defining an acquisition strategy, defining an acquisition criteria helps to understand what you're looking for, and most importantly, everybody must to understand what you're looking for, right? So setting up the acquisition criteria, for example, defining the location, the asking price, the industries that you're targeting is important. Then developing your lenders network. Before you go in and start with the deal hunting, it's good to have at least 3 lenders. When I'm talking about lenders, I'm not saying only the SBA in the US. I'm not saying traditional banks. I'm saying start building your network with the alternative finance market. It could be invoice lenders, cash flow lenders, revenue lenders, all this kind of alternative finance market to help you fund the deals. So once you have an acquisition criteria, an acquisition strategy, your pitch deck done, your SPV ready in a first world economy, your website done, your corporate email, your lenders network, also, you have maybe some joint ventures with family office and private equity firm matching your investment criteria. Then only then you can start pitching, the competitors or pitching somebody who want to exit, right? But not before, because you will lose your credibility on day one, right? If you don't have all the things in place before you go out and reach out and try to do the deal hunting, right?
Tell me a little bit about the process you would walk a an entrepreneur, somebody that's got some entrepreneurial experience, and they have some resources, maybe not just money, but like they have connections in the people. They can build a team. If somebody like that comes to you and they meet your criteria, what's the process you would walk them through to get them ready for their first deal?
Correct. So my methodology for working with clients or mentees, for example, is I provide a one-on-one service because I believe buying a company, buying a deal is a serious thing. Right? It's not. I this reason I'm not selling online courses. I'm not selling trainings online, info products or challenges online. I do one-on-one because I like to build long-term relationship with my mentees, with my client, and my program is 12-month duration. It's not a short thing. It's not a magic pill, right? I put 12 months because some people can close a deal in 3 months, in 2 months, 6 months, 12 months, right? So we need to do a lot of things to reach the point where you start the deal hunting. So I prepare them in 2 months, let's say 45 days to 2 months. We have weekly calls, one-on-one. This is not group calls. It's you and me only. So you want to have access also to my WhatsApp number, to my email. We are fully connected. In case you have any doubt, you can reach out to me at any time. So for me, it's very important to differentiate, to divide. So you need to become good at buying companies, not managing companies. For managing companies, you could find an expert, a CEO who's been running the same kind of companies for the last 10 years or 5 years. You need to replace yourself and position yourself as an investor, not as a manager. My system is very simple. We buy a company, we fully delegate the management, and we collect dividends. It's 3 steps, right? So don't try to be all over the place, right? You just need to become good at buying companies, analyzing companies and buying, and.
Are there any misconceived notions out there? Anything that people believe about this space or industry that just kind of bugs you, and you wish people wouldn't believe that nonsense?
Yeah, so people still believe that it's a lot of going on with no money down deals, right? People, when they read some advertising, you can buy a business with no money down. So for me, no money down doesn't exist, right? So it's a big marketing catch, right? So no money down deals means that you are not using your own money to purchase a company, right? You are using investors' money or joint venture, private equity firms' money to put as a down payment, and then or you using your alternative finance market lenders, right? This means so this is the big thing around buying a company. People say how this can be possible? How you can buy a business no money down? It means that you can use others people money like investors or lenders, right? So,